In this video, traders, we're going to have a quick beginner's guide to range trading. If you're brand new to trading and you want about range trading, stay tuned. Hey traders, a very warm welcome to you. Okay, so what is range trading? Let's have a quick 5-minute guide and also the useful tools we can use and the not so useful tools. So range trading is pretty much as it says. We are trading a market in a range, and traditionally what we're looking to do is fade the extremes of the range on the high side and fade the extremes on the low side. So that means we're buying at the bottom of the range. Our intention is to buy at the bottom of the range here and to sell at the top of the range here, or to go short if we're initiating a new position. That's a theory. That is what we're looking for when we're range trading. We don't want it to break out of the range. We don't want it to drive higher. We don't want it to drive lower. We want it to stay within the range. And ideally, we want to try and identify the turning points where it's going to stay and come back into the range. Okay, so with that in mind, what we're looking for are clues that the level is going to hold, clues that a breakout is not going to happen, and clues that this thing is going to stay within the range indefinitely, or at least hopefully while we're still within a trade. So let's have a look at some of the useful tools we can have when we're range trading. The first one is support and resistance. You've got to be very, very good at drawing support and resistance. So make sure you've got that down to an absolute fine art, and you're very, very skilled at it. And that doesn't just mean drawing lines across tops and highs. No, we've talked about this before. Go and check out a video. Support and resistance does sometimes mean where you have an area and you have to draw a little rectangle. So if we just get rid of these arrows here for now, you may well have to draw a rectangle of support because price might have been just in it several times before, but not quite finite enough to have a line. So the skills like that, so you can say to yourself, okay, we're just in that fuzzy zone now. I want to start initiating it. I want to start scaling into the trade. You've got to be really, really clear on your support and resistance. Now, obviously, the major ones are going to be at the top end of the range and the bottom end of the range. But in the real world, you're going to have other smaller levels of support and resistance in. Like, you know, on this example here, we've got a tiny little one there, which has gone back all the way through to this point here. You get the idea. The thing is, you're going to have little tiny smaller support and resistance that you need to decide what you're going to do at them. Are you going to initiate a trade, in which case you don't want to be stopped out if it tags the major, because it's a good place to go short again. You need to say, hey, am I going to use this as a framework to trade, or I'm just going to look at it and say, hey, I want to see how price responds to it, and then how it responds to the bigger key aggressive levels or fuzzy zones. So get your support and resistance skills up to scratch. They will be the number one thing you need when you're trading in a range. Okay, let's move on quickly. Whole numbers, depending on what the range is, obviously, but very often price is going to be a magnet to whole numbers. This range might well be, the top might well be a whole number, the bottom might well be a whole number, or the midpoint might well be a whole number. That's something that's not discussed very often, guys. The midpoint, and let me use the green, the midpoint may well be the biggest level of the lot. Let's say that's $50. This market may be pivoting up and down $5 either side of that main zone. That might be what is causing the range. So it's up to you to identify that that's that. And this really is almost faux support and resistance. Reality, $50 is the kind of synthetic pivot, if you like, and it's moving $5 above, attracting sellers, buyers dropping off, moving $5 below to 45, attracting buyers, sellers dropping off, and it's just causing this rotational kind of force back and forth over the 50. Even it might well be narrowing out and narrowing down to the 50. So that's something to be aware of as well, guys. The whole numbers, and not just in fact the whole number, that could be a genuine support and resistance level from a while ago. But often you do see that, and people don't spot it often enough. Is that it is a whole number? It's a big key number, and actually we're oscillating around it as opposed to forming a rigid range. Number 3, candlestick patterns. Candlestick patterns are very, very useful for this. Why? Because at these highs and at these lows, you want to see things like wicks. In other words, price has pushed up, hasn't closed, come back down intraday, closed below. There's might be a signal to go in. These are really, really good as triggers. You get a bullish engulfing at lows at support, great, there's your trigger. Bearish engulfing at highs, there's your trigger. That kind of stuff. Don't need to go through all of them. We're talking about candlestick patterns before. You know, go and check out the video on candlestick patterns, but this is something that again is very, very useful for timing the entry of the trade when you're range trading. Number 4, volume. volume is an interesting one because volume often stagnates a bit in a range, but when you start getting to the levels where people want to do business, it starts to spike a bit. So whilst it's definitely down the list of things you need to master, these are way better. It's something that makes sense to have on your chart just to see how it performs. Let's say you get a day closing out the range. The next day opens, volume's low, it starts to drift back in. That's a short all day, every day. If it starts holding up the range and volume starts building and building, even if it's not going much, that's a caution. Hey, it might be a breakout. So you use it in conjunction with your candlestick pattern skills, your support and resistance skills to help guide you whether, or to help guide you to see whether or not it's going to break out or it's going to come back in the range. And the final thing is oscillators. A very useful tool, guys. Very, very useful for ranges. You know, most of the time you want to see, you know, markets moving into overbought, oversold, overbought, overbought, oversold, etc. You can RSI, stochastic, CCI, something like that. So you can look for your divergences. You can look to see how much momentum this thing's got as it's pushing up, which helps guide you and say, you know what, maybe the momentum's a little bit aggressive now. I need to wait and just see. It might just poke its head through for a day and come back down. I don't want to be just standing in front of the freight train here. Let me just see it because there's some momentum here, or vice versa. You know what, there's not even a momentum here. I'm going to smack that thing because I can see it's nowhere near as strong as it was before. I think people are just going to get out. It's going to rotate back to that midpoint, whatever it is. So these are the biggest one, guys: support, resistance, whole numbers, candlestick patterns, and oscillators. Stick your volume in there as well so you can get a good overall view, and that will help you with your range trading. All right, see you next one. Take care, keep your risk managed. Bye bye.